In this video, we are going to be analysing NERV. Now, this is an interesting one because if you go back in the channel, we did do some analysis on this. We did basically say it would continue to fade, and this was literally where we said, or where one of our key levels was. So if you go back, you can always check out, see how these analysis plays out. But as of right now, we are kind of performing or getting some more buying pressure. We're going back to that previous high. Now this is interesting because you can see on the daily we have become overbought once again, and when you go past that third deviation, really we do turn more bearish on this stock. So that is going to be a bit of bias, I guess, in this analysis. Again, not something I'm personally trading. I don't trade the small cap stocks myself. But once you do become into this third deviation, it is something we turn very short bias on because we don't expect it to really hold out of this level for all that long. So just do take that into account. If it's something you are long or looking to take long, we would deem this as very overbought as of right now. But if it did continue to go up for any reason, that 1450, we can see that is the level we hit before selling off once again. That was our second deviation on the 6 month. And if we break that, really, we have final levels at $16.30, $17.30, and $20. So what this does really tell us is if for any reason NERV does continue that upward push, again, not all that likely. We can see as well we're currently moving up right now in a sort of divergence, so it is showing weakness, and that is to be expected when we're so overbought. But yeah, really, if for any reason this stock did go even more parabolic, that 20 would really be our final, and maybe even something else. Again, I don't really trade these small cap stocks, but if it did come to that $20 mark, it may be something I look to trade short. Just as a heads up, but as of right now, I'm not touching it, and I won't be touching it unless it maybe touches 20. But again, I'll post it in the comments if I do end up taking position, just so you know. But either way, as of right now, no position. So these would be our key resistances. Again, overall more bearish on this stock as of now. And so if we start to fade, I'm paying attention to 1150, 1080. And then and they're going to be the key ones, because if we start to fail below those, then that's where we would have a bit of concern to the downside, and that would be $8.65 and $8. Now this $8 is going to be key because obviously we can see the previous low did come down to around $8.50, $8. So if we start breaking below that level, it is going to show that more likely the selling pressure is over in this stock, at least for the time being, and it's really not to be expected. I mean, it is to be expected because if you just look at the overall markets are weak, down massively from their all-time highs. Now, why is that? Because we have high inflation. Fed keeps increasing interest rates, and that's really going to be the key driver of the market. And so that's really the key thing you need to be focusing on, really, when you're trading any stock, but especially on these smaller cap stocks. And the reason for that is that they use a lot more debt than the larger companies do. In this kind of market condition, Apple and stuff like that, they can pay off their debt. The interest rates won't affect them as massively as these kind of companies where they are more reliant on debt. Because obviously if interest rates go up and that's the only way they can grow, they have to make two decisions. It's either don't take loans and don't grow, or take the loans, but really then your profit margins are going to get destroyed. And if you're a fundamental investor, then you're not going to be investing, or you're going to cut size because it's not going to be anywhere near as good an investment because your profit margins are lower. So do be keeping out the fundamentals, because the fundamentals are always the key driver of the market and stocks. Technicals can be good for the entries and exits, but really you should be using fundamentals to be deciding your trade plan. But if we break below $8, then we are looking at 580, 517, 284, 245, and they are going to be all our key supports. We can see that is basically the 52-week low. It is showing down here for some reason at 54 cents, but it's not showing that on the daily. So I do think this is just an error. Maybe a misprint, or it might just be an error over on Think or Swim, but I wouldn't be paying attention to that. It's just going to be kind of this 250 support, and that really be the key focus. Again, technical levels, good for the entries and exits, but really have your fundamental plan, because if you're only trading off technicals, unless you're day trading, you're probably playing a losing game. Anyway, I hope you enjoyed the video. If you did, want to drop a like and subscribe, and check out one of these two analysis videos.